Ladies and gentlemen, good day and welcome to MACFOS.LTD H1FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ramadin Rani from HIM Securities. Thank you, and over to you, sir.
Thank you, Jacob. Good afternoon, ladies and gentlemen. Thank you for joining MACFOS.LTD first half FY24 earnings conference call. Joining us on the call today are the senior members of the management team, Mr. Atul Dumbre, Chairman and Managing Director, Mr. Vinod Prasad, Full-time Director and Chief Financial Officer. We will commence the call with the opening thoughts from the management team, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries that you may have. At this point, I would like to add that some of the statements made in today's earnings call will be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainty that may cause actual results to differ from anticipated outcomes. Now, I hand over the call to Mr. Atul Dumbre, Chairman and Managing Director of the company, for his opening remarks. Thanks, and over to you, Atul sir.
Yeah, thank you, Raniji. Hello, everyone. Thank you for taking out your precious time for this call. Dear shareholders, we are delighted to present the financial results for the first half of FY24, which showcased a robust performance. In this period, we achieved a revenue of 53.55 crore, EBITDA margin of 6.09 crore, and PAT margin of 3.87 crore. This signifies remarkable growth with a 50% increase in revenue, a 30% increase in EBITDA, and a 33% increase in PAT compared to H1 of FY23. Our aim for FY24 is to maintain this momentum and targeting a 40 to 50% growth in the revenue while keeping our PAT margins in a range of 8 to 10%. In H1 of financial year 24, our PAT margins stands at 7.23%, which is slightly below H1 of FY23, which was 8.09%, and our internal projection of 8%. This minor variance of PAT can be contributed to easing of semiconductor shortages worldwide. So basically, due to semiconductor shortages in year 2021 and 2022, prices of semiconductors have gone significantly up. But from the start of 2023, the prices are coming down to their normal values. So the items that we sell were procured at a slightly higher prices, but we have adopted to changing market conditions and selling these items at slightly lower gross profit margins at reduced prices, as prices have declined subsequently. However, we are confident that we will maintain 8 to 10% PAT margins for financial year 24 as a whole. I would like to draw your attention on some last year performance data. In financial year 23, For first half of the year, we did 36 CR in revenue with PAT margins of 8.1%, while for the whole year FY23, we did 80.8 CR revenue with PAT margin of 9.2%. That means for FY23, our PAT margins of H1 has grown to 1.1% for the whole year. We expect similar trend to continue because generally our 40% of top line is achieved during H1 and or 60% of the top line is achieved during H2. But our main expenses like salaries and rent and fixed costs remain the same. Furthermore, other various key business matrices like number of orders served, average order value, and count of repeat customers have consistently shown positive growth during H1 of FY23. We have also enhanced our inventory management systems and capabilities, which have resulted in decrease of slow-moving inventory. So, at the end of financial year 23, we have 2.33% of our inventory as slow-moving inventory, which has come down in last 6 months to 1.6%. So, at the end of H1 of financial year 24, our slow-moving inventory stands at 1.6%. We have also demonstrated strong expense management and continuous optimization efforts. In July, we have implemented salary increases for all our employees as a part of our annual appraisal cycle. As we have highlighted during our previous annual general meeting, the outlook for 2024 remains optimistic, with our success driven by three key factors. One is addition of new products. Second is optimization of our supply chain. And third is development of proprietary products. Let's take a look at them one by one. We have added a lot of new products during H1 of financial year 24. We have expanded into new categories and acquired new brands. At the end of H1 of financial year 24, we have 16,220 products on our website, which are roughly 4,000 more than that of end of financial year 23. Increasing this product count is a step ahead in becoming comprehensive solution provider for electronic hardware in India. Second factor is optimization of supply chain. To achieve this, we have registered a new wholly owned subsidiary, Nozan Technologies Limited, which has been established with one thing in mind: to streamline our import supply chain. We also have undertaken substantial backend work to further strengthen our gross profit, hopefully the result of which we will see in coming 6 months. The third factor is focusing on our proprietary development products, particularly with special emphasis on drone and drone components. We have several products in pipeline and we plan to launch them in coming quarters. In fact, in Q2, we have already introduced two new products. One is F450 quadcopter drone frame, and second one is F550 hexacopter drone frame, both of which are designed, developed, and manufactured in India. So, the three factors of adding new products, optimizing supply, and development of our proprietary product lines, especially in drones, we believe that in coming years will help us to become a pioneer in Indian electronics and hardware industry. That's it from the management side of presentation. Thank you all for being patient and listening to this. Now I'll hand it over to Raniji to take any further questions from you guys, and we'll be more than happy to answer your queries.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhishek Sharda from HEM Securities. Please go ahead.
Yeah, hello sir.
Hello.
Sir, first thing I want to ask about our margins, EBITDA margins, operating margins. So what kind of operating margins are sustainable in your business?
So we have shown that I think it will be better if we talk about PAT margins, because we, as a strategy, we consistently have focused to maintain our PAT margins. So we believe that 8 to 10% PAT margins are sustainable even in long run. And we have shown it consistently. So as I have said already, we are, even in H1, we are maintaining 7.25%, 23 or 25%. And generally, we do more business, 60% of the business in second half of the year. So our fixed costs are the same, like, salaries are the same, warehousing expenses are the same, our rents are the same. So if we do more business, even the 10% more business in second half, our expenses are way less, and that extra 10% gross margin adds to the net margin. So last year it was increase of 1.1%. So we are comfortable. We are confident that we will be in that bracket of 8 to 10%.
8 to 10%, right, sir. But just now you said that second half contributes almost 60% of the revenue, right?
Yeah, if you talk about last 3 to 4 years, I'll say the bracket could be 40 to 45 for the first year, and 55 to 60 for the first half, and 55 to 60 for the second half.
So, sir, in the first half only we have achieved around 48% growth, right?
Yes.
And if second half contributes around 55 to 60%, then we will easily cross more than 50% growth for the complete year, right?
But
I mean, your growth guidance is around 40 to 50%.
Yes. Yes, what you are saying is right, but I'll just add a little bit different view on this. Because last year also, if you see, our 40% revenue was from first half and 60% was from second half. So, this first half we have achieved 48% growth. So, if we do 60% this year also in second half, we will have a similar 48-50% growth in second half. It will not be more than that. If you do the similar, it can be more if you do more business. That will be the case. But yes, 40 to 50% we have maintained even in this half. And right now we don't see any challenge in maintaining the same rate in second half of the year.
And we believe this semiconductor, material and semiconductor shortages, the prices that have increased in the first half will be gradually solving in the second half, right?
Yeah, actually prices have gone down. They are not gone up, gone down. So what happens is we procure a material and the material gets delivered to us in 30 to 60 days. So let's say we purchase a product at 100 rupees, but by the time we receive it in warehouse, because the prices are going down, the cost price has reduced, let's say by 2 rupees, 98 rupees. So now we do our profit margin calculation by 98 rupees. So that 1-2% difference we try to absorb, not to pass on to customers because we want to competitive in the market. And that effect, we believe that effect has worn off to most of its extent. But yes, it will continue maybe 3 months, 4 months max. So the prices will normalize. Again, you are never sure. There are wars going on, oil prices might go up and the prices might go up again. But right now we see that the worst has already passed off, so nothing to worry.
And sir, this like 40 to 50% growth, we are looking in long term also for like next 3 to 4 years, right?
Yeah, as I always say, my short-term view is of 5 years, and we believe that for 5 years we can maintain this growth.
Maintain this growth, right, sir. So one more thing, like what is the contribution from government orders in this first half, if you can quantify?
I do not have that data handy with me, but if I have to give a shot at it,
Yes.
It will be around 5 to 7%. It has increased compared to last H1. There is like, at least 2-3% increase because we are focusing on, we are putting extra effort and focusing on government orders. But yes, this number has gone up.
If I remember, sir, I think in the last phone call you told around 7 to 8% of the revenue comes from government orders.
I really don't have those numbers handy. If you want, you can just mail us, because we will just reply to the mail and give you the exact figures. One thing is sure that our government orders have increased, like the percentage in the revenues. It has increased.
And sir, any comments about debt reduction? Like, are we looking to reduce debt?
I'll pass on to Binod for this question.
Hi. So our debt has, long-term borrowing has gone down by almost 1 CR, if you see our balance sheet. And secondly, we have used more working capital. So overall long-term borrowings are reducing. For working capital, it's just that we are using our working capital.
So like, do we have some internal targets about debt to EBITDA, like we maybe want to maintain at these levels or something like that?
No, we don't have such parameters to measure. We make sure that this ratio needs to be healthy, but as such, there is nothing to, we don't have such parameters.
Yeah, so basically, if you, there are so many parameters to look at. So as a management, our view are very simple, that we look at a certain top line, that we need to maintain growth. That is number one, 40 to 50%. Second is, with some gross margin, like let's say 25-28%. And then we have all our expenses, we have make sure that they must be in a percentage of our total revenue. So the salary should be less than 5% of total revenue, digital marketing should be less than 1.5% of total revenue. So that from the top line, we can come down to that 8 to 10%. So generally, these are the key matrices that we follow. Growth. Second is maintaining a certain percent of gross margins and coming down to a certain percent of net margin. And we believe that everything else will take care of itself.
Right. Understood, sir. Thank you for your detailed responses. I'll come back in the queue.
Yeah, sure. Thank you for asking this question.
Thank you. The next question is from the line of Saurabh Sadhwani from Sahasrar Capital. Please go ahead.
Good evening, team. I wanted to know about your B2B business. So who are the clients and what kind of products are they buying, and how do you sell to them?
Okay, I'll hand over to Nilesh, who is our B2B director.
Yeah. Hello. Hi, this is Nilesh. Currently, our B2B contributes to 56, the H1 that we have reported. So, 56% contribution comes from B2B business. B2B business, our main clients are in the field of drones like General Aeronautics, then Australia Aerospace, then in the field of one more Karman drone is there. So these are the drone segment, which is one of the key driver of this B2B business. Then there are automation companies like Shen Technologies. Shen Technologies is one of the customers. Then government automation from the government orders is also increasing in B2B. We classify our government revenue as a B2B revenue only. Okay. So these are our main customers. And once you say government, then there are various, GSUs and R&D labs like CDAS, ISRO, DRDO, and there are various IITs and NITs. So, cumulatively they contribute, their contribution has been increasing in B2B.
Okay. And they buy through your website, or is there any other sales channel for B2B?
Okay. So the sales channel of B2B, how it works, I will just explain briefly. Whenever such potential B2B customers, when they are doing prototyping, they first order it through B2C segment. Okay, they prefer that route because that is faster. And in prototyping, you always want to save time. So once we receive the orders in which the customer has already given us their GST numbers, then we pass on that data to our B2B team, which is highly filtered and very qualified data. And those, then we have a B2B team of 30 people roughly. So they contact those customers, and some of them will get visited. We try to understand their requirement in a better way. And potentially that team helps in, increasing the ticket size of those B2B customers who has already placed B2C orders. So we cannot look at B2B and B2C business as a separate unit. It's a single entity in which B2C platform is used to generate leads, and those leads get converted to sales order by our corporate team, which is B2B team.
Okay. And the second thing I wanted to understand, that what is your strategy with your proprietary products? Means how are you deciding that what products you need to build, and whom do you target for these products?
So, hey sir, Atul here. So basically for our proprietary products, we have three different brand activities. One is Orange branded products. So those are basically OEM products. So we have the brand ownership. Smart Elects are the kind of products, electronic products I'll say, and we have a design development team in-house to develop those products. And EasyMake are mechanical products, so different types of wheels, couplings, brackets, etc., frames, door frames. So that is for mechanical. So for electronic development, we have one brand. For mechanical development, different brand. And OEM products, we have third brand. So all combined is our own products. And we have targeted some products like for electronic development, we have targeted broom products, because since we are selling so many products, we know what technologies are coming up, what kind of demands are there for those technologies, and we can kind of have a peek into the future that, this technology will do well, let's say 5 years down the line. So that is the main agenda of deciding which technology we want to focus to build our own product. That is one way of looking at it. Second way is, since we are selling so many products, we know that for what kind of product there is demand in the market, but there is no product available. Like for our Smart Mix products, we realize that the motor drivers, DC motor drivers are not available easily in the market. So we develop those kind of products. So generally we want to have a go at technologies that we believe will do good over 5 years, and areas where there are some lacunas or empty spaces in the market.
Okay. Okay. Thank you. Thank you for the detailed answer.
Yeah. Thank you, Gaurav.
Thank you. The next question is from the line of Gunit Singh from CCIPL. Please go ahead.
Hi, sir. Thank you for the
Hello,
call.
Gunji.
So looking at the guidance that you provided, can we say that we can, conservatively achieve 120 CR plus top line in FY24 and 10 CR plus PAT?
I will not like to provide any fixed number for future forecast. However, what we have said, we'll stick to that we want to maintain the growth rate of 40 to 50%, and we want to maintain the PAT of 8 to 10%. Now, I'm sure you guys can do the calculations, but yes, as I do not want to, present the exact number as it will be wrong.
All right. So, what percentage of products sold on our website are manufactured in-house by us only, our own brand?
So the three brands that I just explained, Spartanex, EasyMech, and Orange, those three brands contribute to 10% of our revenue as on today.
Okay.
Okay.
And all the other products sold are from third-party brands?
Yeah. So, we are authorized channel partner or authorized distributor for more than 140 brands worldwide. And
Okay.
generally, the other products sold are from those brands. But we always ensure that more often than not, we are authorized channel partners, because that is the way we can secure a long-term relationship and a long-term business.
All right, got it. And sir, what gives us the confidence to grow 40 to 50% annually for the next 4 to 5 years? I mean, what are the main drivers of growth, and what are the main challenges that you see for us going forward? Do we have any other competitors in this space? What are the main challenges going forward?
Okay. So we do not have any apple-to-apple comparison which have such a big, huge product line and which have more solution-based business than product-based. So we consider ourselves a solution provider, because if a customer do not want to buy a drone motor, he's trying to build a drone. So you need to have a comprehensive portfolio of products and technical understanding of which product will go with which. So, there is no apple-to-apple competitor, number one. Second, our confidence of growth comes from two, three things. One is, if you look, electronics is entering in every part of our life. Let it be automobile, let it be Wi-Fi related things, internet connectivity. So everywhere electronics is getting embedded into our everyday life. It is increasing rapidly. Second thing is, there are government policies which are intended to support manufacturing in India. And the more manufacturing in India goes increasing, the more requirement for these parts will go, and the more companies who are trying to develop their own products in India will grow. Thirdly, we see some of the international players, which are Arrow Electronics, Mauser Electronics. So their business model is basically, they have a warehouse in some country, something like Singapore, where income tax is low, and they have almost 3 lakh to 10 lakh products in their portfolio, and they ship those products worldwide into multiple countries. So we believe if those guys can have 3 lakh to 10 lakh products today, where we are standing at around 17,000 products, why can't we multiply that product number to, let's say, 1 lakh, 5 years, 6 years down the line? And why can't we increase our business 5, 6 fold when government policies are aligned with it, or market for electronics is aligned with it? So that is a very simple, I'll say, belief from our side that yes, this will happen.
All right, sir, that is great to hear. And what are the main challenges that you see yourself facing, potentially?
So currently, we do not see any threatening challenge such as that, this will happen. So we are confident that we will grow. In our business, I think the biggest challenge is management of your inventory well and management of your cash flow well. So that we have done already, that we have set up systems and we have our own ERP software. So this is perhaps the most hidden and a very important part of our business, that we have, even today we have capability of managing 1 lakh parts through our ERP systems. And the decision to which part to purchase, when to purchase, what quantity to purchase is automated even today for us. So that software part we have developed since 2017, and it helps us to maintain that inventory rotation period of 2.5 to 3 months. So we rotate our inventory every 2.5 to 3 months effectively. That is, I think, the biggest challenge in our business, and we have solved it already through our robust IT. We have in-house team and we have developed our own software to solve that problem.
All right, sir. That is great to hear. And sir, I'm new to the company and not very familiar with it. So I mean, just to get a brief sense, I mean, what kind of customers do we have? What kind of customer profile? What kind of customers are our targets? I mean, are those the people who are looking for some intermediate products to build something up on their own, or are they like end consumers of the product? And I mean, briefly, how would you describe, what you do and your...
Yeah. So briefly, we describe ourselves as a solution providing company for electronic hardware. So what we do is, whenever there is people, so might be an individual, there might be a startup, there might be some people from education segment, or there might be some corporate who are trying to develop their own product into electronics domain. So those are our customers. And when they are looking at a product, I always give this example. When a customer is looking at a product, he is not looking for a drone motor. So if you want to buy a t-shirt, you are just looking for a t-shirt. And end of discussion. If you like the color, size or fit of it, you keep it, you return it. Our business is different. We are into the business of providing solution of electronic hardware. So my customer is always looking to build a drone. He is trying to build the end product, and he's looking for a solution that he wants, let's say, propeller, a motor, a controller, a battery, a charger, a pin, 20 different products for that particular development. And we, being technical people, we have acquired those brands who sell those products worldwide, maybe 10, 20 different brands, and we have already listed those products on our website in a way that customer can get solution to build drone. So that is our core strength.
All right, sir. Got it. Thank you very much for the explanation. How many employees do we have currently?
Pardon? How many?
How many employees do we have currently?
Employees. So currently we have 170 employees, out of which 120 employees are on our payroll and 50 are contractual employees.
All right. Got it. That's all from my side. Thank you and wish you all the best.
Thank you, Guriji. Thanks for the question.
Thank you. Ladies and gentlemen, request you to limit your questions to one per participant. The next question is from the line of Sanika Khemani from Sapphire Capital. Please go ahead.
Hi, sir. Actually, my question is, in which of the verticals are we seeing the highest growth potential in? And can you also please help me with the product launches which we did in the quarter and H1FY24?
Okay. Sanika ji, the verticals that we see the biggest growth are, number one is drone. In last 2 years, we have seen tremendous growth in the drone segment. And the second vertical is of single board computers, so microcontroller boards. So that also we have seen tremendous. So these are top two. Third one might be the e-vehicle related things like lithium batteries and chargers and controllers.
Okay.
Fourth will be sensors category, and we have some good growth. So these are maybe top 3, 4, and they just keep on shifting up and down. But yes, generally these are 3, 4. And I think we have marked percentage of sales in the presentation that we have uploaded, so you can just have a look at that for detailed view. Okay. And your second question was which products we have launched. So those are basically frames for building the doors, and there are two sizes. One is 450 size, one is 550. 450 size is for quadcopter door, 550 size is for hexacopter door.
Okay. Okay, and if I may ask one more question, like, who are the competitors for us?
So as I said, there are no apple-to-apple competitors which are doing same business. The example that I gave are those international players like Arrow Electronics, Mauser Electronics, DGT Electronics. So basically, the difference is those guys have one warehouse in Singapore and they are trying to serve the world with it. And we are doing the similar thing by having our base in India. So we are trying to serve Indian customers. So of course they are way, way bigger, but yes, I'll not say. And the advantage that we have over them is time. So we can provide a good local support and timely delivery to our customers in India. And in R&D nowadays, time is of great essence because if you are developing a new product, now you have to launch 4, 5, 6 cars a year rather than just launching one car in 2 years. So technology has become fast and hence people have to develop new products very fast.
Okay. Okay, sir. Thank you.
Thank you, Pankaj.
Thank you. The next question is from the line of Tejas Mehta, an individual investor. Please go ahead.
Hey, hi. Thanks for taking my question. I'm pretty impressed with the work that you guys are doing. I had a couple of questions which might be just a repeat of what you must have already, mentioned in your pitch. One is when I look at Mauser Electronics, they already have a presence in India.
Yes.
Somewhere from Bangalore.
Okay.
So these guys already have presence and they are already selling Texas Instruments and Microchip and all these manufacturers' products in India. So these are your direct competitors, right? When these global guys, they are establishing their foothold in India and then directly selling it. And obviously, they come with much more reputation and credibility. So isn't it that, you have these competition which can create problems for you?
Okay. Thank you, Tejaji. Thanks for such an interesting question. So Mauser does have a sales team sitting in India. They do not have a physical product in India. So their model, as I said earlier, is they have a warehouse somewhere in Singapore or somewhere, and they have just some sales people sitting there in India trying to sell their product. Number one. Number two is when you buy their product, these guys will not support you. So order will be placed to their Singapore warehouse and you have to take care of custom clearance, and if there is any faulty product or any support that you need, that has to be again passed on to the Singapore warehouse. So there is a lag in time. So these are just their sales offices present in India. Number two is Mauser, Arrow, those people, those are more focused towards conventional technology. If you look at their website even today, they are not selling any product related to tools. They are selling very few products related to development boards, not many products related to IoT sensors, not many products related to batteries, chargers, not many products related to 3D printing. So our strength is we have built on the new technologies in past 10 years. And if you look up for these technologies, Mausers and Arrows, they have not built their presence in those. So basically they are more of a conventional seller who are focusing on the semiconductors, resistors, capacitors and ICs, which goes into the more of production and the bigger clients like that. So that is the basic difference, and that is why we have been able to differentiate ourselves in this segment and create the 16,000-17,000 product worth of SKUs and let's say 53-54 CR worth of business in H1 itself.
Okay. So other than them, they have your sales rep office in India. There is no one else in India or an Indian company which does business like you.
Pardon? I couldn't get the follow-up question.
No, I'm asking that there is no other Indian company who does the same model of business like you, right?
Yeah. So there are multiple Indian companies, but as I said, they are not having the complete product portfolio as we have. So there are few online stores. If you search drone parts in India, you will find few online stores who is having maybe selling only drone parts or only partial of drone parts. Again, they will not be authorized channel partner for those brands. So these these people, we do not consider them our apple-to-apple competitors. Someone will be selling some microcontroller boards, maybe authorized channel partner for one or two of the brands that we are selling.
Yeah, but just a thing. See, it's basically a trading business, right? For you guys, essentially, you are importing the parts and you are distributing it them in India. You have created a marketplace, so all kudos to you. But do you think these kind of margins that you make about 15% EBITDA margin, 13 to 15% EBITDA margin, 8 to 10% PAT margin? This seems to be very high margins for a trading business. So maybe you are making better margins today because you have the depth and the width of it, of the product catalog. But how easy is it for someone to come and replicate? What is, I mean, to me, the question mark is on how sustainable are these margins?
Yeah. So I understand what you say, and I agree on that part that, it is really surprising to have such good margins for a trading business, and that is because we are not a trading business. As I said, we are into providing solution for electronic hardware, and you need to look at the things from customer perspective. So a marketplace model and all that. So many of our parts, what we are selling today, you look up for them on Amazon and they are available. So Amazon is into trading business because they are selling shoes, they are selling shampoo, they are selling TV, and they are selling drone motors. So that is a trading business. However, in our case, we are focusing on new technologies and their solutions. So for example, when I say I want to be there in drone technology, I'll figure out that there are three types of drones. One is, let's say, racing drones, one is photography drones, one is, let's say, the agricultural drones. I'll figure out what are the components that are required for agricultural drones. So there are propellers, there are 25 components. Then I'll talk to all the multiple manufacturers who are making those components, and then I'll get the authorized channel relationship with them, and then I have to create a portfolio where the customer is never trying to buy a motor of drone. He's always trying to make his own drone. And in that process, he requires all the parts for that drone. Also, he needs to understand which part goes with what. And he needs to have that support. So, he is looking at a drone as a complete solution for his drone. So, that is why we are able to maintain those margins. And I firmly believe even today, as I said, there are many people selling on Amazon. And suppose if you buy a motor from one Amazon seller and controller from second one, they are not willing to provide you any support after that. So what you are going to do if your motor is not working? He will say that maybe within 7 days you can get the refund. After 7 days there is no support. We provide 6 months to 1 year warranty. So you cannot go away with your drone because one of your motor has gone bad and there is no support. So this is the solution part of our business, and that is why we believe we are able to maintain margins. And if that would have been the case, that margin would have low down, I don't think people would have, we would have been able to make this this much 80 CR business last year. It would have gone down way earlier.
Yeah. But at your size, shouldn't it be easy to replicate for someone else? As in, you are currently doing 120 crores revenue this year. Shouldn't it be, someone with who can pump in a 20-25 crore capital?
Yeah, they can do that. They can go to 20 drone suppliers and ask them for their distributorship in Indian market. But let's forget about our business. Let's say tomorrow you have good capital 20 CR, and if you go to Tata and say them that I want distributorship in every capital of every state of India, will they give it to you?
Depends on my background.
They are not going to give, because they have set up distributor channels since last 10-15 years. They have established a good relationship with them. And as a company, you don't want to suddenly break all your relationships, because in future nobody will trust you if you do that. So if you go with a lot of capital to 20 different drone suppliers, they will say that we currently have good distributing channel in India. Maybe one or two will give you the distributor authorized channel distributorship. We have built this over last 10 years. So people have heard about drones in last 3 years. We have had our first drone supplier onboarded in 2016, even before that, 15, I guess, for batteries. So it's a process you build over the period of time. You contact suppliers, you get 1 and 2, and you contact them when the technology is at its nascent stage. Currently, we are focusing on technologies like RISC-V controllers, but I'm pretty sure nobody from this audience at least, maybe 1 or 2 have heard only about this technology. From 4 or 5 years down the line, it will be big. So we contact those suppliers at nascent stage, get the distributorship, over the period of time, build the relationship, and nobody can just come when the technology, now everyone is talking about drone. But nobody is going to give you distributorship, like not everyone, at least 1 or 2 may, but it is really hard to build that comprehensive product portfolio, and customer cannot do without it. You cannot get drone motor distributorship, but it's not of no use to customer. He wants to build the whole drone, and that is what differentiates us.
Got it. So I just to take 2 more questions and then I'll pass it on. Number 1 is, you are mentioning a lot about drones, right?
Yeah.
But drone is only 22% of your business. There's a lot more other business that you have.
Yeah.
Right? And at the same point of time, you also mentioned that you are a total solutions provider.
Yeah.
Again, you have given the examples of drone, right? Are you also a solution provider for any other, let's say?
I can talk about technology like 3D printing, but my problem is very few people know about that technology of 3D printing in general, I'll say general non-technical domain.
So let me ask you that, like drone, right? How many, say,
technology.
Full solution provider, if you, for how many products?
Yeah, so if you come onto our website, there are 12 categories. All our 16,000 products are distributed into 12 different categories. So one is drone, one is 3D printing, one is IoT and wireless. So there are 12 different categories. And if you have to categorize,
yeah, that should mention the PPT as well. Yeah.
So you can just visit our website, and on the home page there are 12 categories which we have categorized our products in. So those are the technologies that we generally use.
So you give the entire solutions for all of these categories, right?
Yeah. So that is the intent, to give the whole solution for these categories. All the parts that you need as a end product developer or end product manufacturer.
And the other thing is that your ticket size per client is very low, like 3,600 rupees. Say if someone is looking to build a drone I think will cost somewhere in the range of maybe at least 40,000-50,000 rupees probably.
So this, because we are operating online, so the customers who are corporate customers, for them our average ticket is around 35 to 45,000 rupees. I'm not sure. Let's take for ballpark of 40,000 rupees. So that is for our corporate customers. And because we receive a lot of small orders, so if a person is trying to build a drone, maybe he'll start small with, ordering some motor and a basic controller, which will be around 15,000-20,000 rupees to try something, and then go on building one over the other. So actual drone will cost somewhere around 20,000-50,000 rupees, but those might be 4-5 different orders from our website. But when that gets converted into a customer's product is developed, which are our B2B clients, then the average order value is around 40,000 rupees. And we have shown growth consistently in our average order value as well.
So when a client is sourcing parts from you, do you help him in understanding that, okay, if you are buying this motor, then only this controller will work with this?
Yeah.
Do you give them like a package solution? That is one. Number two is that, so the client obviously is taking parts from, so obviously he's taking parts from multiple brands and assembling a drone. And then basis the prototypes, when the prototypes succeed, he might want to scale up the production, right? Has any of the clients scaled up production, and have you been able to supply the parts for scaling up the production?
Yes, we have been able to do that. It's a game of, having, we currently, this 6 months only, I think we have shipped around 1 lakh more. Can you give me the number? Yeah, around 1,50,000 order, I guess, if not more. So let it be. So 1,40,000 orders. But some of those customers will go through the development into the production phase, and we have recently supported a customer for 250 drones order, and we have been consistently supporting customers in multiple quantity orders for the matter. That is why our B2B sales are increasing. 2019, our corporate sales was only 5% of the total revenue. Today it is 56%. That is the testament of what you just asked. And
so that is one client who is now looking to build.
There are many such clients. I'm just giving what I remember right now, that one client we recently served 250 drones order, so it was like a big moment for us. But yes, from 5% to 56% growth in total revenue, the contribution of our corporate clients, that itself says that many of our clients are going big and buying from us in higher quantities. Otherwise, how can we grow our number to, the percentage in number to that?
Right. Okay. Great. There's much more to learn from you guys, but I'll let someone else also ask questions. Thank you so much.
You can get in touch with us anytime, and we'll be more than happy to show you around or, answer all your questions. Because we believe that investors are, we firmly believe that investors are a big part of, Robo now, since we are public. And we'll be more than happy to, get your queries solved.
Oh, sure. Yeah. Thank you so much.
Thank you, Tejaji.
All the best. Yes.
Yeah, thanks.
Thank you. The next question is from the line of Vishal Mehta, an individual investor. Please go ahead.
Hello, am I audible?
Yes.
Yeah, Haji, you're audible.
Yeah. Hi, Atul. Thanks for a very detailed presentation and very good set of numbers. Just, it was heartening to know that, you guys are projecting to grow 50% year-on-year for the next 4-5 years. Just want to understand, how will you be able to, as you increase your SKUs, how will you be able to protect your gross margins? Because these kind of gross margins are definitely very lucrative and which is showing in your business model. But in terms of size, once we, reach higher SKUs and higher growth projections over the next 2-3 years, how is that going to play out? Can you just help understand better?
I don't get your question. I understand that our size is going to grow, but I believe that we are already at a 16,000-17,000 SKUs, and last year only 80 CR odd revenue. So I'll not say very big, but it's a sizable business, and we are it's simple. We get the new technology, we get the distributorship, authorized channel. Okay, I'll go ahead with my answer. So basically, if there is a very high competition in any segment, then what you said might be right, that we will lose some business margins over the period of time. In our case, we are protected by the nature of business itself. Hello? Is it audible?
Yeah. And
Am I audible? Yeah. We are protected by nature of business itself. So we generally are authorized distributor or authorized channel partner for all the principals manufacturing their products, and they do not provide distributorship to anyone who is going to them with big amount of money, because they understand that person has to have understanding of technology. He needs to support customers technically if something goes wrong, and he needs to have a background of dealing in the similar type of products, similar kind of technologies that we have. So generally they choose their partner carefully. It is not a t-shirt where you buy and don't like then return. These are technical products, and you need to understand which products you want to stock, with which product, how you want to represent those products on your website so that client can understand with what goes with which, and then provide them a complete solution for a particular technology. So I think this business, nature of our business helps us to maintain that. And one thing that we keep on doing is we keep on tracking, let's say, 10 new technologies each year, get distributorship of those principals manufacturing in those, and then get the product on board. So out of those 10, two, I don't know which two exactly, but two will grow because electronics is growing and it's coming into daily life. Two will grow and be very successful technologies for us, like drone has become. 5, 6 will be moderate, like 3D printing today is a moderately successful technology for us, but it is still doing good for us. And one or two will start over the period of time. But the key is to get to those technologies way ahead of people, and we have support of our online store to do free marketing kind of activity for us, because we have almost 5 lakh people visiting our website a month. So I think these key factors, that having a great online store, capability to serve corporate clients. So you will hardly find anyone in India, even with Arrow, Mauser, DCP, they don't have a great website as ours, and they don't have capability to serve the clients locally. So to build, we have already built that competitive edge of, getting the technologies right in time, growing along with the technologies, having the great online store to market those technologies, having the corporate sales team to get the milk out the clients to get the maximum sales. And I think these factors protect our margin, will protect our margin even in long term. Because anybody can buy a t-shirt and sell it tomorrow, be your competitor. But you cannot buy drone product from authorized, cannot become authorized channel partner of particular drone product, let's say drone motor, and become our competitor. They will not entertain you. You can buy from other sources, but then you will already have very bad pricing in terms of your cost price. So you cannot compete with us.
Sure.
Okay, Sharji. Anything that I missed?
So this is good. We will engage further offline. I will allow others to ask questions.
Yeah, sure. We'll be more than happy to solve your all queries.
Thank you. The next question is from the line of Nitesh Jain from Riverland Capital. Please go ahead.
Hi, good evening, Atul, Nilesh and Vinod. How are you doing?
We are good, Nilesh.
Okay.
Good to talk to you again on the second one.
Yeah. So, very good set of numbers. We are delighted to see the performance. And also thanks for a very nice presentation, giving all the operating numbers and all the data which one would require as an investor. Now, basically, I have two questions in the interest of time. I am referring to one of the slides from the deck, and that is very, very heartening. The slide wherein you showed the number of customers, total number of customers, and also the number of customers who have placed 2 or more orders. So what it says is the growth in number of customers who have actually placed one more orders is much higher than the overall customer growth. Okay. So basically my question is, as a management team, what are the actions you are taking? Even though, your business is in sweet spot because of the both private sector and government policy supporting it and the, huge $40 billion electronics market and all that. But my question is, what actual steps you guys are taking to increase this, number of customer count or the penetration? Because what it says in the slide, that the overall experience with the website or with the app is super. Therefore, the growth in, repeat orders is much higher than the overall growth. So I want to ask you about the step one. You may call it as a question on business development. So you may, bifurcate between B2C and B2B in whatever way you want. This is question number one.
Yeah. Okay. So, Mitesh ji, thanks for your question.
Yeah.
So for business development, our businesses, as Nilesh earlier said, you cannot segregate our online and offline business. So basically, the way we look at it is our online pages or strong online pages, 5 lakh visitors visiting us each month, that is there to generate leads for our corporate sales team.
Okay.
So to give you a number, 40% of the people who place order online are placing it with GST number.
Okay.
So those guys are our future corporate customers.
Mm-hmm.
Okay. And our online platform acts as a great marketing tool for us itself. So we always focus on marketing our online platform because we know our corporate marketing or corporate sales team will get higher leads.
Yeah.
Once we market our online sales platform, that's it. And that we do through multiple activities. We do a lot of social media activities. We have a great YouTube channel. We have a great blogging website on our site where we post about these technologies because our customers, they are not like nobody will wake up today and say, oh, I need to buy a drone motor. So these technical visitors, they come through a funnel where initially they are interested into technologies, then they'll learn about the technologies, and later on, in some stage, they'll buy. So we create a lot of content on blog articles, on videos, which will attract our customers, and they'll know, oh, there is a store called as Robo. These people are having home parts, having microcontroller parts, having 3D printer parts, and later in the stage when they want to buy, then they'll remember us and then they'll buy from us. So marketing effort, one goes into, making this customer learn about the brand name Robo and what we are doing.
Yeah.
And then there are marketing through Google ads and Facebook ads where we, market our products for direct sale. So we market in our website because corporate sales team is taken care of. And we have seen this, I keep on telling this, that 2019 our corporate sale was only 5%, then it increased to 10, 15, 20%, and today we are standing at 55% because we have been able to convert successfully our retail customers or online customers into our corporate customers, and as they grow, they have stuck with us. They order from us because we also provide them technical support and assistance. We have a team of engineers at the back end of our website which provide them the technical support. Something like a medical store. You just don't go and ask them that, I need, let's say, XYZ tablet. You just tell them that I have cough, not feeling well, have this issue, and the guy will understand and give you the tablet.
Sure.
So a story is like that. You want to build drone for agriculture, something like that. Come on our website, you read our blog, see the videos, come on our product, then you'll understand what you need to buy.
So got it. So, it is commendable that without any great ad spend or digital marketing, you are doing it on your own with the word of mouth, publicity and the brand name of Robo. It's great. And also, I get you, even for the B2B, you are saying that the website remains the fulcrum of the activity. It is the mother, the focus point where even the B2B business gets generated, leads get generated from the same thing, right?
Yes. Our website is will be focused on marketing effort, on marketing of website, and that is something you cannot build overnight. We have built that website, 18,000 product pages, unique pages. We write all our content, we click all our images. we upload all our images because that unique data has a great value in eyes of Google. So when you are searching anything on Google, more often than not, Robu's website will come up. I'll request, the investors to go and search multiple like drone parts in India, buy drone motor in India, buy lithium batteries in India, 3D printing parts. I'm pretty sure Robu will pop up. And that's a testament to the efforts that we are putting in for the last 10 years, developing our website, developing SEO, developing those pages, creating content. So, and then we are able to convert some of those clients into corporate and, get the more revenue through them.
Perfect. And Atul, I have a second question. This electronics parts market is huge, okay, in India. There could be, as you said, globally it's a very big business. There could be a million SKUs and million, products which can be there. But at the same time, from the discussion and also the past performance of MACFOS Limited, it seems that you guys are rather focused on the margins also, right? So my question here is, when you add more SKUs, is it an internal criteria that you want to add new technologies, new SKUs, new products, but at the same time you don't want to sacrifice that whatever 25% gross margin or 8 to 10% net profit margin? You just don't want to add products for the heck of it just to increase the number. So is it a major criteria internally to add technologies on your platform?
Yeah, we want to keep on adding products like this. H1 itself, we have added all 4,000 products on our website portfolio.
Yeah.
However, whenever we add new products, we sell them with the margins that we are comfortable with, which are, 25-28% gross margins and expecting to maintain 8 to 10% net margin.
Okay.
So if the product is not selling at that margin, then, it's of no use for growing the business for us. So our criteria is simple. We'll add the product, we give the margins that, we believe that we want to maintain, and then we try to sell the product. Yes, there are some cases where we sell the product at lower margin initially because my buying volumes are less, and I know I'm buying 20 quantity today, but soon as I hit the mark of 100 quantities, my margins will be taken care of. And I want to test the market for those 10 products. There is no point selling only 10 quantity at a higher cost. I'm not going to earn anything out of those 10. So for testing small batch, we can do at a lower margin. But yes, ensuring that when we grow to a certain quantity, I'll hit the margins that I want to.
Perfect. Thank you very much, and all the very best to the entire. Thank you.
Thank you, Nidhi.
Thank you. A reminder to all participants, if you wish to ask a question, you may press star and 1. The next question is from the line of Rohit Poti from Marshmallow Capital. Please go ahead.
Thank you for the opportunity, and as always, thank you for being so detailed and patient with all your answers. So there's one question from my end. You incorporated a manufacturing subsidiary, right? So my understanding was that we will always outsource manufacturing and our focus will be our website and our inventory management and our backend software. So is there a change in thought process in the top management and on manufacturing by yourself?
Thank you, Rohit, for asking the question. So we have registered that new subsidiary, MACFOS Electronics Private Limited. As I told you earlier, the Orange brand, Smartlink brand and EasyMake brand, those three are together doing 10% of our business. And we know that there are benefits for the manufacturers in income tax. So anyway, we are doing, I'll say, manufacturing for these three brands. So even if you get the part manufactured and doing assembly in-house or part manufacturing outside and part in-house, it is considered as manufacturing activity. So for those especially for Smartlink and EasyMake products, we can have tax benefit through this company in long run. And when the quantity or the volumes for these products will go, it's obviously will be a financial decision. So for example, tomorrow I have to assemble PCBs in-house. My PCB assembly activity has to grow to such a year such a volume that it makes financial sense to do that in-house rather than doing it outside. And this is the last year to register a manufacturing company to get that income tax benefit. So currently the business on that particular company is nil as on H1 2024. But sure, in future, why not? I mean, there are tax benefits. So we have registered a company and some activities we will, like 3D printing service business we are currently doing. It's manufacturing. We have 3D printing machines in-house already. So those kind of manufacturing will take where first it has to make financial sense that it is more cost efficient to do in-house than outside, and then we can take tax benefit through this MACFOS Electronics Private Limited.
Perfect. No, that's it from me. Thank you so much for your time.
Yeah. Thank you, Ruchi.
Thank you. The next question is from the line of Sanita Khimani from Sapphire Capital. Please go ahead.
Hi, sir. I wanted to ask if we have any new product launches in our pipeline and which vertical are they going to be in?
Yes, there are, as I said into my presentation, there are product launches in our pipeline which will be launched in next quarters, 1 or 2 quarters. And as I already said that we are focusing currently products related to drone. So those will be focused drone peripherals, accessories like that.
Okay, and like, do we have the number, like how many products are we looking at?
I would rather not say anything about that because since the products are in development stage, so it will be wrong to comment on that right now.
Okay.
But yes, what I can comment is we have clear focus on those 4-5 categories, and for electronics product development, we have clear focus on drone, and we are building in this direction. You'll see some products from some other categories as well, like sensors and microcontroller boards. So 4-5 categories that we already mentioned. But yes, you'll see in 1-2 quarters more product launches from us.
Okay. Thank you, sir.
Thank you, Sanjay.
Thank you. The next question is from the line of Gunit Singh from CCIPL. Please go ahead.
Thank you for the follow-up. Just one last question. So for our 3 brands, manufacture their products in-house or are they contract manufactured?
Okay. So for our 3 brands are Orange, other 2 brands are SmartLex and EasyMax. So the difference is Orange brand products are manufactured in some factory as per our specification, and we just get them under our brand. So Orange brand is our own registered trademark brand. So we have brand protection for Orange branded products. We do not do any design development activities for those, other than, let's say, specifying our capacities that we need, or maybe connector size, connector length, connector type, or other similar things. For SmartLex and EasyMax, we have design developed team of mechanical engineers and electronics engineers, I think 15 to 16 people now in-house. And those people design the product. So let's say the drone frame that we have launched, that was the design, that was designed in-house, and we have third-party suppliers to develop the mold because I don't want to put up mold manufacturing setup for just one product. We got the mold developed, then second supplier will do the production of using that mold for us. So there are vendors, and the assembly of the drone frame will happen in-house. We have 2 people doing assembly for us in-house. So this will be the structure for SmartLex and EasyMax that we do not, because there are so many technologies. One side we are making PCB, one side making some mechanical parts. So we want to have the IP as in design of the part. It will be too much capex incentive to have, a mold making machine and a CNC machine and PCB making machine in-house. So it's a financial decision. Maybe we can have an assembly machine when it makes more sense financially for assembling PCB. But IP, like the design our team do, they look for what customers are looking at in the market where there are, lacunas. They will figure out that, design the product, then we get manufactured, assembled in-house, and then launch the product. First part release and implement. That is the process.
All right. So basically, designing and assembly would be in-house and manufacturing would be outsourced.
Parts will be manufactured outsourced.
All right. Got it. That's all from my side. Thank you.
Okay. Thank you, Guruji.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Ramadin Rane for closing comments.
Thank you, participants. On behalf of Time Securities Limited, I thank the management team of MACFOS Limited and our investors for listening patiently. I would also like to thank all the participants for joining this call. Now, I would like to hand it over to Jacob.
Thank you. On behalf of MACFOS Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.